The highly successful local franchise of 7-Eleven, owned by the Philippine 7 Corporation or PSC, recently held its annual stockholders meeting. The local licensee reported an increase of 16.6% in their annual net income for 2016. Our Bzwatch correspondent Heidi Santos filed this report.
PSC President and CEO Jose Victor Paterno reported in their annual stockholders meeting that PSC ended the previous year with a total of 1,995 stores. 7-Eleven also opened a record number of 400 new stores in 2016.
About half of them will be in Vismin, actually. Half of the stores will build. So Mindanao is growing the fastest in percentage kasi bago pa lang. Visayas is the second fastest in terms of kasi 2012 lang pumasok. But Metro Manila is still growing at about a 15% base.
In 2015, net profits for 7-Eleven was at 1.0 billion pesos. In 2016, this figure rose to 1.2 billion pesos. The company not only opened over 400 new stores, it also established new distribution centers, warehouses, and regional headquarters to cope with the growing expansion. Stock prices likewise increased to 135 pesos per share, which means that increased price earnings ratio came up to 53 times, with trading volume going much higher. Clearly, the company is not in need of more operating capital to drive it to success. PSC President Paterno's drive now is towards nurturing the Filipino entrepreneurial spirit, and franchising a 7-Eleven store is no longer that expensive, and the company has simplified the system.
They take over a franchise, they take over a corporate store, and what it is it's much simpler. We no longer charge for electricity, no more maintenance, no more. Of course, the split is now lower because we don't charge them for that. But the idea is it's simple. We wanted to know every day how much they made. Now it's complex because you never know what Meralco is going to charge you. You never know it. But in the end, it's not really controllable by you naman. You're not allowed to turn off the lights.
With a simplified system, the sharing between the mother company and the franchisee now has a new application.
It would range. It ranges depending on the store volume, whether it's a high sales store or a low sales store.
With new systems in place, Paterno is giving themselves time to see the results. 7-Eleven stores now have more shelves to fill with more new products.
Actually, all of the franchisees work in the stores. So they're there taking care of customers, making sure the stores run. Over here, the people with the money, they don't really work in the stores. They hire somebody else. So it's different. It's like, well, we can hire somebody too. Right? We have the capital. We don't really need capital anymore. What we need are people passionate about serving customers. And we don't need another investor. We have investors. We have many people wanting to buy our shares, but not enough shares. So that's not our problem. Yeah.
The company's improved earnings were driven for the most part by the higher retail sales both from corporate-owned and franchise-operated stores. Figures have it that in 2015, sales stood at 25.8 billion pesos. In 2016, this surged to 31.8 billion pesos. We asked Mr. Paterno how much, on the average, does a 7-Eleven store sell.
Typical new store does about 40,000, 14 million a year, 15 million a year. So, yeah, 6 billion, yeah. Yeah, 6 billion a year.
Undoubtedly, 7-Eleven is the market leader in the convenience retail sector. They have ramped up their advertising and promotions campaign and their customer loyalty program as well. Expect more new product offerings and remodeled 7-Eleven stores in the next 5 years.